Hello and welcome to the Wednesday check-in here on Landy's Crypto Corner. Today is January 8th, 2025. We're looking at Bitcoin as we typically do. We're going to follow up with where we left off on Monday's video, where Bitcoin had threatened to kick off expansion into that overhead resistance on Friday. We had talked about that possibility. We did see that on Monday. And of course, we did talk about a scenario in which we could see a potential high, whether it was a two candle high, like what we just got from the Monday into Tuesday candle here, or a three candle high, because we did see Tuesday, the open was red. So now we got that drive of regular bearish divergence. And as I had mentioned, this is on a trend break, and we're getting some of that bearish divergence from over here. If we go ahead and look at kind of the structure, we had this downtrend here. We had the trend break. What do we look for? Higher low equal low structure. So this is not completely unexpected. We got that slight bit of expansion of price action above the upper second, but didn't kick off any further expansion from there. And we actually saw that in terms of trend and support and resistance, let's go ahead and actually turn on the the local kind of areas of interest that I've been talking about lately. I had mentioned on Monday what I wanted to see and kind of what the criteria was for Bitcoin to continue to continue up, essentially. While it was a positive sign, we saw about 7 closures coming into the highs here. What do we got? 4 and then 3. Yep, we got 7 closures coming in there. So I jokingly said, like, maybe it's going to dump off now or turn around now. That joke, was apt because it actually did dump down to the basis band and then dumped through it and tested down towards that lower second, in between the lower first and lower second. But essentially, we're still trapped in this wider zone. And that's kind of the point that I was talking about on Monday. And that's where we dipped in for some liquidity here into the red zone. This was an SR flip. So we had the resistance. We flipped that into support on a closing basis. We saw that area tested 3 times before the fourth, dipping into that zone for liquidity. And then we got the expected bounce out of there. And it actually, I wasn't actually initially looking for it to run all the way to the top side, but it ended up doing so. We did have a little carve out for that. As long as we saw, closes above this lower high, we were going to get a trend break. And that's one of the things that we were keeping on the lookout for. We got that, ran right back to the green zone overhead resistance here. Why is it the green zone? Well, because above here, and especially, we can see closes that kick off, volatility expansion to the upside above the upper second standard deviation. But until we see Bitcoin clear that overhead resistance above 104, it's likely going to remain range bound. And above 104, then we're looking to the actual high up here at that, 106 to 108, and I talked about 108 to 110, 110 to 112, 112 to 115, so on and so forth, 115 to 120. Kind of taking $2,000 at a time. And then as expansion and volatility increases to the upside, those jumps get larger, whether it's on a close or a wick, really doesn't matter. But in this case, from here, I'm still on the lookout for higher low equal low structure. If we do see this low drop specifically at 91,271 on a close, well, that would put Bitcoin below the lower second, but still that would be volatility expansion into support. And from there, while that would create a deviation high up here, we would still need to see closes below this Fibonacci level here, the 1.168 or 16.8% above the $69,000 all-time high, which is a fib extension from the bear market high to the low in 2022. So the high of the prior cycle at $69,000 to the bear market low in 2022 at 15.5. The extension of that, this is a 16.8% or 1.168. 1.168 or 16.8% above $69,000. This was a key level. We did see this this area here act as, a bit of resistance slightly above it, and then a nice area of support on the back test after Bitcoin got above it. We saw that it closed right on it for 2 candles, pulled back a bit, and actually put in that wick low there, that red line at $85,000. Then started to get above it. Found some resistance here, some common resistance across these 3 daily candles. Came down, set a higher low on a swing and a close right on this area as well, and then got the nice move up, even back testing, as I said, flipping this area from resistance into support. If this does break down, then, at 88,700, that's where I would start to look at this as pretty concerning for the bulls, because then it's just kind of this order block structure over here, and that's coming in at, like the low $87,000 region to that $85,000. And that's where, if we get any expansion below there, we would already be in an expansive posture, breaking through a pretty big SR level. Or support and resistance level, to then go and kind of hang on by a ball hair essentially here, and possibly get expansion further down. This is mid 80s, $85,000, kind of down to $80,000 in general. And then I'd be looking, upper 70 to 80,000, possibly a retest of the prior structure breakout down below. That would be a big correction. So far, I know it's, volatile move down. We had the expansion into compression, and Bitcoin's just bouncing around. So as I'd mentioned, this is kind of set up in a range, and the range mirrors our support and resistance levels at this particular moment. The lower second, like I said, any closes below there would kick off a higher volatility environment, kick off some expansion of the bands to the downside in that case, but it's right into support, just like we got the close above. Didn't get the follow through for expansion up further into that overhead resistance, but it essentially met all of the criteria that we were looking for, right? This is a nice buyback off of this area from yesterday's candle. A nice low coming in at 92,500 there, and essentially front running that support area at 92,000 to 88,700. So again, we're getting another front run of that area. Now, there is some bearish things to be aware of, but because we do have the trend break to the downside, we have to be cognizant and looking for the possibility of higher low or equal low structure here. So we're going to go down the time frames and up the time frames here a little bit, but we're going to start by looking at a few other things here on the daily, and that is RSI. As I'd mentioned, going to get a drive of regular bearish divergence if we see a high put in kind of right there where we did, and that is what we did see populate. This is essentially already played out, that particular move, right? The continuation of that would be down into the actual support here in 92 to around that $88,700, $89,000. So essentially like a $3,000 to $3,300 range. Wicks below are fine. Closes below, not good for the bulls here. That would indicate that, Bitcoin, if it hasn't already tested down into some of the structure over here, will likely do so. So that is something to be aware of. Now, when looking at something like stochastic momentum, which is measuring close over close price momentum, not Stoch RSI. I say this every time because I get a lot of new people, so I'm sorry for those that have listened to this over and over again. But Stoch RSI measures the velocity of RSI. We just looked at RSI. I don't need a Stoch RSI. This is a regular Stoch. It's just there for confluence to help us get some pivots for momentum, and this is close over close momentum. And in this case, we can see that 100,471 is going to be the momentum pivot back to the upside here. So Bitcoin, about 5,000, 5,200 bucks away from that. That's not out of the realm of Bitcoin's measurable volatility, right? So that is something to be aware of. It does look as though it wants a little bit more, maybe sideways and down, maybe fill out the wick, maybe test down a little bit further. But that might not hold true in some of the lower term time frames relative to the daily. So let's jump down a couple time frames and take a look, specifically the 12-hour. And the 12-hour is still heavily down in towards the bearish control zone here in its next close. So middle of this this Thursday candles, it's Wednesday for me, Thursday candles open, right? We need to see closes above in the next 12 hours above 102,330 in this case to turn this back up. So it does look as though this is going to go all the way into the bearish control zone here for Stoke. This is a nice move back down, and this is interesting, right? It's the same kind of look, just 12-hour candles. We didn't get any higher low structures here. We did get a little bit of a swing high to swing higher low pause there, but that was all just one move on a closing basis, just kind of sideways and up before the move up here. And then a move back down to the lower first. You can see where the lower second standard deviation is coming in on the 12-hour. It's roughly where it is on the daily. And this would indicate on the 12-hour, if it does close below here, this would give us our indication that the daily might follow through with further downside if it does close below around $92,000, right? And then we're starting to look to possibly a price replace band by the bottom side there at that $88,700 to $89,000. Back to the upside here, we do want to see around $96,000 to $97,000 regained by the basis band to test back up to $100,000. You want to see this high right here break, $99,900, basically $100,000. So we want to see that break out. If you were to, just draw this as a range, this was the deviation high of this range, and then it's right back into the bottom side of this range in the shorter term, right? But we essentially want to see $100,000 taken out to the upside, as kind of denoted by the daily momentum pivot. Let's look at a few other things here. Let's see. So we got significantly higher highs. There's no trend. This is, I mentioned this on Monday. Everybody knows the trend is your friend until the end of the trend, but not many talk about the second part to that, which is when the trend is unclear, everyone's in fear, both bulls and bears. But if you set specific conditional criteria for direction, whether that's continuation or for areas of interest, you can make pretty informed decisions for your trades, right? And let's go down a few more time frames. So it's still pressured down in terms of momentum, obviously. Still has the chance to put in a higher low relative to this last low, just like the daily. Let's drop down to the 4-hour as we get quite a few 4-hour closes. We get our 3-4-hour closes in the 12-hour candles. So the first of these 4-hour closes, we do see momentum pointed back to the upside, but nothing structural that's actionable here on the 4-hour. But we might be getting, some inklings of what could come next. We have hit some extremes on volatility. Bands, the lower second, it can test down here, and even as the bands are going to continue to get expansion, unless this very quickly moves back up to the basis and hangs out there for a couple closes. Excuse me, I'm still having trouble with my voice. Then I would say, we're probably looking at expansion into support or retest. I would look for more bounces, more volume coming in that area, but there is the possibility that this could try to put in some sort of a lower high, maybe bounce up, put in a lower high, and then we look for either continuation by taking out this low and going into that 92 to 88,700, right? So if it were to bounce up and then come back down and take out the low at 92.5, that would be, that's now an uptrend to a downtrend break, and then a lower high trend reversal setup to confirmation, right? Or we look for a lower high, come back down in higher low, equal low fashion, take out a more reasonably actionable lower high, and trend break it back to the upside. And that's where we can start looking to, where the basis is. Again, this is coming in at 98,220. To the upper first, which is right there. We have the upper first and upper second right in our overhead resistance here at 100,000, 101. I'm sorry, it's a 101,000 and that 104,000. And that's where in the expanded posture right now, it's either going to be continuation to the downside or this is going to go back up and go into a compression again. I don't think could it just run one way to the other? Yeah, then I'd be careful up here again. Right? If it just runs the bottom side of the bands to the top side in terms of volatility, we need to see some sort of a trend change and or trend break back to the upside. Even if it took out this would be a deviation, take this out. The high at, 102,800 almost. then, could it test that area? I would still look for that area to act as pretty significant resistance until we see. I would honestly be looking out for a lower high on the 4 hour. If it does bounce from here and not get continuation right now, I'd look for a lower high and then some higher low, equal low structure. If you're looking for a bullish trend shift and trend break, or you look for a lower high and continuation down into the bottom side of the support areas here, right? So that is something to pay attention to. We do have Stoke momentum pointed up. The momentum pivot's $93,000 right now, and Bitcoin's roughly around 95, give or take, depending on the exchange. Here on spot, it's 94, 850 to 900, right? So it's got some room in the lower term timeframes to come down and retest. The other thing is there is the possibility for this to get, some. Can we get some bullish divergence? Some hidden bull divs. Yeah, it's possible. I don't think it's actionable. I mean, quite honestly, I want to see it get. I want to see it get regular bullish divergence. Now that would come into conflict with what the bulls want to see, though. I will say that. So they want it to bounce from here and kind of hang around and make slightly higher lows or equal lows to try and get regular bullish divergence. But we shall see. Again, I'm sorry about the coughing. Let's go all the way down to the hourly. Let's see what it's at. Yeah, it's expending on an awful lot of energy without breaking trend to the upside here. So, I do suspect at this current moment, it does look as though it might want to, even if it pushes up a little bit higher, it might want to come back down and play around the low side. Maybe even retest 92.5 and lower. So that's the current state of things as it looks right now, because it's expending a lot of momentum in terms of like stochastic momentum and not really getting anywhere. But I will say that, the last, area that I'd want to see essentially about 96,000 taken out from here, or puts in a nice higher low swing locally and then tries to head up. So kind of either come down for a higher low or equal low. That would look pretty good. Or even right now, just come down and pop back up. But I suspect that the 15 minutes telling us that it wants to come down, and it is giving some early indications of that. But if it can hold its local structure lows, then it can at least try for an actual bounce and maybe some sort of an hourly trend break. And then we come back to it later and see how that plays out with the 4 hour, so on and so forth. But let's go ahead and kind of look at this in the context of the weekly. And I also mentioned this. All right, bulls, you got to shit or get off the pot here, because you got a higher low right there at that 90, that 91, 271 warning signs below. Now, what I will say is their saving grace for the bulls is they didn't set the closing low. This is a swing high to swing higher low look right between this 3 candle structure. So if this comes back down, it hasn't necessarily painted the closing low, so it still has the ability in terms of structure to still close a higher low relative to the last higher low, which is down here at 58,863, right? And that's where this would look like a higher high, higher low swing to a lower high, possibly lower low swing into support. So, and again, by the end of the week, I do want to see bulls continuing to close above the upper first standard deviation. I think this is pretty important for immediate tests higher mid to late January, and that's around 96,222. It's going to be between like 96, low 96 to $97,000, depending on if this weekly candle is green or red. Again, for the bulls' sake, I would like to see them close above the upper first standard deviation. That gives them a different volatility range to play in, because if you do see closes below the upper first, then it's more biased from a volatility standpoint to go back in from this big expansion into a compression. Now, price compression combined with the base Bollinger Band compression is what I mean. So we're already kind of seeing some price compression, right? We're seeing a nice consolidation essentially, but we're also going to like probably look at Bollinger Band, expansion kind of coming to an end, and going back into a compression, at least shorter term. But it also gives us the targets of if this support falls apart, you can see how that daily at $85,000 means nothing on the weekly. So the basis band is the next big area to pay attention to, and that's around $80,000. So again, like I said, below, 88,700, then we're looking like down to the mid 80s at that $85,000. Anywhere below there, we're looking 80 to 85. That just so happens to be where the weekly basis band is coming in. Anywhere below there, there is $75,000 does have some precedent. I would take it 75 to 80 and then a possible retest of the high side structure, obviously over here first, 70 to 73, or 70 to 70, and then 73 to 75, or so on and so forth. But that wouldn't be what bulls want. I'll tell you that for some of the volatility stuff that I talked about after the the yearly close, the 6 month, 3 month, and so on, when I was going through all that would start to paint the fears that we could see volatility acting as a major cap on price overhead. That doesn't mean that Bitcoin would go into a bear market. It doesn't mean that, that all is lost and like all that kind of stuff. But what it would likely look like is Bitcoin would be a sideways and up grind with a lot more stopping along the way, a lot more consolidation along the way on things like the weekly, longer periods of that consolidation, and then moves up, kind of capping it, and then kind of, slowly walking price up or grinding price up over time. And not hitting that like very aggressive time frame for price appreciation that many, I think, are looking for, if that makes sense. So that's where I'm going to leave things for today. We've already gone over my 20 minutes that I wanted to kind of keep this to. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all of that being said, Landy out. Take care.